Ladies and gentlemen, good day and welcome to the Agarwal Industrial Corporation Limited Q4 FY23 and financial year ended 31st March 2023 earnings conference call hosted by HAME Securities Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Astha Jain, Senior Research Analyst from HAME Securities Limited. Thank you, and over to you, ma'am.
Thanks, Darwin. Thanks to the senior management of AlphaStreet Ecosystem Limited for giving us the opportunity to
Yes, sorry to interrupt, ma'am, but the line for you seems to be breaking up. I would request you to please start again.
Thanks, Darwin. The management of Agarwal Industrial Corporation Limited for the opportunity to host the call. The management is represented by Mr. Lalit Agarwal, Full-Time Director, and Mr. Vipin Agarwal, Chief Financial Officer of company. We will commence the call with the opening thoughts from the management, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries that you may have. Before we begin this, let me mention a short cautionary statement. Some of the statements made in today's earnings call will be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties that may cause actual results to differ from the anticipated outcome. Now, we hand over the call to Mr. Vipin Agarwal, Chief Financial Officer of the company, for opening remarks, post which we will open the Q&A session. Over to you, sir.
Good evening to all and a very warm welcome to everyone who has joined us today. I take the pleasure of welcoming you all to the Q4 FY23 and financial year ended 31st March 2023 earnings conference call of Agarwal Industrial Corporation Limited. Let me start by giving you a brief overview of the company's business and will then take you through the financials. We'll then be happy to take questions if you have any. At the very outset, we are pleased to inform that we have reported highest ever numbers in terms of top line, operating profit, and bottom line in FY23. This we are able to achieve on back of strong volume growth, since we have clocked total volume of 424,000 metric tons in FY23 as compared to our 385,000 metric tons in FY22, thus registering a strong rise of 10.13% on year-on-year basis. Agarwal Industrial Corporation is an integrated bitumen, logistics and ancillary company. Plays prominent role right from sourcing of bitumen to ocean transportation, to storage, to value addition and manufacturing, to road transportation, and finally sending it to our final customers. With such a vast setup at our end and being fully integrated, we believe that there are high entry barriers to the industry. You have seen that in the last couple of years, there have been an incremental growth in our operating profit and PAT due to onboarding of more bitumen vessels. This is a part of our strategy to secure timely availability of vessels for meeting incremental demand prevailing in India. We want to bring to your kind notice that in last year, out of total volume, we did 2 lakh metric tons of volume from our own vessels. In case if we have to charter vessels from outside, usually we have to pay an additional 15 metric tons on the same. So every time we transport through our own vessels, we save cost that we have to pay outside and earn 25% EBITDA margin. Presently, with our full vessel deployed, we are able to do around 280,000 to 3 lakh per metric lakh tons in a year through our own vessels. And giving you an example, if we have to onboard about 20,000 metric ton vessel capacity more, we at the cost of about 150 crores, we would save an additional 50 crores to the bottom line. Earning such margins from our own bitumen vessels is a huge incremental savings to us. Hence, we will continue to search for additional vessels, which should give us an incremental ROCE of 20% or more. I would like to retaliate here that onboarding bitumen vessels is an integral part of our overall bitumen and logistics business. There are some external factors in any business which hence we believe that our financial performance should be seen on a full year basis. Also, India being a country with second largest road network has the lowest consumption of bitumen as compared to countries like USA and China, wherein for the same road construction, requirement of bitumen is 3x, thereby providing a large opportunities in Indian market. Every year, budget allocation to the road transport and highway ministry is rising. This year, road transport and highway ministry has received a push to the union budget, raising the allocation by 36% to around 2.7 lakh crore for 2023 and 24. This is nearly 10% jump over the budgetary allocation of 1.99 lakh crore made in the budget of 2022-23. Higher budgetary allocations were necessary to help the ministry meet the 25,000 kilometer road development target announced by the government in the year 2022-23. Budget amidst rising interest expenses and increasing land acquisition costs. This, along with large quantum of maintenance work awarded by government and other agencies, is creating continuous growth demand for the bitumen. We believe that we continue to grow in coming years, and for 24 we are expecting to grow at the same pace as in FY23. We will also be efficiently utilizing our capital, providing more vessels, thus strengthening and smoothing the overall business. Now coming on the financials, we are happy to report that AICL has continued to demonstrate phenomenal results in the year FY23 as well as in the Q4 FY23. Coming on to the quarterly results, during Q4 FY23, we have reported a 1.1% jump in the consolidated revenue from operations at rupees 660.18 crores on a year-on-year basis. Our EBITDA has increased by 15% at rupees 43.20 crores, and we reported a PAT of 28.3 crores with an increase of 19.22% during Q4 FY23 as compared to Q4 FY22. However, on full year basis, the company has reported a 26.35 rise in the total revenue at rupees 2024.08 crores in FY23 as compared to rupees 1601.99 crores in FY22. Company has reported a 32.03% rise in EBITDA at rupees 144.57 crores in FY23 versus rupees 109.50 crores in FY22. Company's FY23 PAT surged by 44.87% from rupees 63.68 crores in FY22 to rupees 92.25 crores in FY23. We have been constantly witnessing rise in the ROCE from 14.65% in FY19 to 22.52% in FY23. Also, our debt equity ratio is continuously seeing a decline from 0.51 in FY19 to 0.34 in FY23. We believe that rising consumption in India with constant production creating opportunity for AICL. We are committed to serve our nation by being an integral part of Indian infrastructure development through bitumen, logistics, and ancillary. I would like to take any questions from here.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vikash from Concall. Please go ahead.
Yeah, thank you. One clarification is required, Vipin. On the 1st of December 22, we announced about the acquisitions of the specialized bitumen vessels, which is the Durga and Rudra. Okay.
Yeah.
At the time we mentioned this one, our overall capacity is a 51,574.
Yes.
But now we reported is a 48,550. Is the difference of here is a 2,000 metric ton is there? Any specific reason is there?
Thank you for the question. No, there is no quantity difference. It is only in a particular draft. There is a summer draft and a tropical draft. So depending upon the draft available as on date, we have mentioned the quantities. So even if during the other seasons, the loading is in fact higher than what we have reported sometimes.
Then it's a corrected quantity, corrected vessel size is a 48,550, not the 51,000.
In the current draft, the climate, yes, the 48,500 is the loading capacity. But when it comes to the next quarter, it will be again go to 52,500 or 51,500, 52,000.
Okay. And
so there are different drafts. There is a summer draft, there is a tropical draft, on basis of which we report on date when we are doing the Concall, the loading capacity.
Okay, understand. And one thing also I want to understand is that generally the Q2 is a sluggish quarter is there for our industry.
Sorry, can you come back again, please?
Is it Q2 generally is a Q2 is a sluggish quarter for our industry, bitumen industry?
Yes. Q2 is a little bit of, because since it's the industry we are in, it is a little bit of seasonal climate is affected in the business. Yes, second quarter, July to September, is usually the lowest revenue giving quarter for us.
Okay.
But nowadays the activities are continuously happening even in the monsoon. So if you have seen on a year-on-year basis, we have been growing in this quarter as well.
Okay. Understand. Thank you. One small clarification is there. Actually, whatever your this telephonic line is there now on website, it's not working. It's not a presentation and the financial guide, but you just check this one also. Okay.
No, it is working. Actually, there is some, I think, problem from the BSNL, I guess, today. But otherwise, our lines are always working. If I have to dial your number, it is working.
Okay. I understand. You just check because I continuously dial in a 6-7 times. Then after I will dial.
I think there is some network problem from the
okay.
service provider. From our side, the phone, if you ask me to call now, I can call you from the same number.
Okay. Thank you.
Thank you so much.
Thank you. The next question is from the line of Ayush Vimal from Clearview Capital. Please go ahead.
Hi, Vipin. Thanks for taking my question. Just wanted a small clarification from page 12 of your presentation. I see that the refinery production this year has increased from 4,900 to 5,400. So I've been under the impression that refinery is generally, curtailing production, which is resulting in an increase in imports. But FY23 seems to be reversing the trend. So just wanted a clarification on that front from you.
Can you just repeat which page number you're referring to?
This is page 12 of the presentation, 13 by 24 of the PDF, where you compared bitumen consumption, refinery production, and you showed imports.
Yeah.
So the refinery production has increased from 4,900 to 5,400, which hasn't happened in the last 4-5 years. So just wanted to check if the refineries are increasing production these days.
No, not really. You see, as we have been always saying in earlier concalls also, the total refining capacity is in India by the PSU still stands at maximum 5.5 million tons in a year. But there is some seasonal maintenance or refinery shutdown due to which actually the production 100% capacity is never met. But yes, in a particular year, sometimes they do, if they have not done any maintenance in a particular year, they may be able to produce about 5.5 million tons. But usually, if you have seen on a year-on-year basis, the production is nearly 5 to 5.1 million in any given year.
Got it. Fair enough. Another question that I had is, look, I'm looking at your standalone P&L for the last 3 years, right? And I'm just looking at your gross profit, right? And I just see that the gross profit per ton expanded from 1,700 to 1,800 rupees per ton in FY20 to about 2,400 rupees a ton in FY23. So there's a 600 rupee per ton expansion in gross profit on a standalone. So this excludes shipping. So I just wanted to check, if this is likely to reverse or, this is a sustainable increase, and what has been the reason for this increase?
No. It will definitely increase from here. What you have seen from last 3 years, It is always on a incremental side. And with the setup that we have already built now, we don't require any additional operational expense as such in terms of any other cost. So whenever we are any volume that we are targeting from here, which will help us in increasing the volume as well, it will definitely result in a higher per metric ton EBITDA, and it will not reverse at any given point.
So just one clarification, listen, I'm here looking at revenue from operations minus cost of material consumption. So I'm not looking at other expenses. I'm not looking at manufacturing expenses. This is pure trading spread that I'm looking at. And that has increased by 600 per ton.
Yeah, even if you see the bitumen business is totally it's in all. We have not segregated any trading, or because for us, if we are manufacturing and bringing product to be transported at all ends. So whatever product is being manufactured or brought at other ports, it is sold in an equal manner.
Okay. May I just check on how the spread is actually determined? How do we price our contracts? There's some mechanism.
There is no contract as such in this industry. But yes, with the growing demand, whatever product we are being able to bring or sell at all the factories that we are able to sell any quantity that is available to us at any given time. So the demand is such that whatever product is available at our disposal to be sold, we can easily sell. And with the existing customers that we already have, we in fact adding new customers every day nowadays, with some references from one customer to other customer.
Got it. And just one more question. I spoke to some EPC contractors, and some of them suggested that for NHAI road contracts, there is preference given to BPCL, HPCL for bitumen purchase. The contract mentions that a stipulation that the contractors have to buy from PSU refinery. So just wanted to check on how do we
if I have to talk to in a practical manner, there is nothing like this. We are selling, and we are on a year-on basis, our volumes have increased, and in fact, we are supplying to BPCL and HPCL as well.
Okay. What proportion approximately of our total volume is going to these PSU refiners?
BPCL, PSUs, I think we are selling about 10 to 15% on a year-on basis. Depends upon how much they take as per tender conditions. But yes, this year we have a contract with BPCL of supplying about 30 to 40,000 TMT. This current quarter two, I am talking about FY23-24.
Got it. No, fair enough. Thank you so much.
Even PSUs are putting tenders to take products from any other vendor from third party, and we are supplying to BPCL and HPCL. Even in the last year and even in this year we are supplying, and in the year 21-22 also we are supplied to them.
Got it. Fair enough. Thank you so much.
Thank you so much for your question, sir.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Anupam Agarwal from Lucky Investment Managers Private Limited. Please go ahead.
Thank you for the opportunity, sir. Good evening. Firstly, my question is, sir, in the past we have guided for a volume growth of about 25%. This year, in your opening remark, you mentioned 10% volume growth on a base of 385 last year. What gives us confidence going forward we'll be able to grow at 20-25%?
Thank you so much for your question, Anupamji. As we have always said that our growth is between 10 to 20% on a year-on basis. But yes, we have been able to go towards the higher end as in the last few years. And this year there was a challenge of bringing the product at the disposal, because the source of product, there was a lot of waiting, and there are so many factors that affect sometimes to bring the product into your maybe different locations that we have. That has affected in a quantity going down by about 10 to 20,000 tons.
Okay,
the refinery shutdown also is a part of this process.
All right. So by this, do you mean that there was some sort of inventory destocking at the customer's end, or some other phenomena?
No, there was some concern in terms of bringing the product to bring the required volume that we are targeted. There was some concern from the refinery side when the refinery had some maintenance, and the product was not available as per requirement. But
So in a normal,
still we have managed to grow and clock 10% growth in the last year's volume.
so if the refinery maintenance wasn't part of the plan, if we would normal state, we would have done around 445, 450. Is that what you
Yes, easily.
understood? Going ahead,
This is what we are trying to complete in the current year.
got it. Going ahead, what is we've done about 1,600 EBITDA per metric ton this quarter, this year. And you mentioned gross profit is likely to sustain and increase from here on. What is the likely scenario on EBITDA per metric ton going down 3 to 4 years?
See, as I have explained in the last question, all the fixed expenses that we are incurring in terms of handling, operation, it is already there irrespective of what volumes we do. So if we are clocking more volume, the increase in cost is only the throughput cost that we have to incur, which is hardly maybe 20%.
Okay.
So that would result in, if we are bringing in more product and selling more product, it will definitely result in higher yield in terms of per metric ton because your additional expense is minimum compared to the volumes that we'll be doing.
Right. So the last 2 vessels that we added in December, were they part of top line and EBITDA in this quarter?
No. There was 7th vessel which was deployed half of February, and the 8th vessel Rudra is being operational in the current year, and it was not a part of the business in the last year. So the 7th and 8th vessels effectively will be fully operational in the current year, and the operational on top line and bottom line will be seen in this year.
Understood. And how many vessels did we outsource apart from own vessels?
We have been, as mentioned in the presentation also, we have done about 424,000 tons, out of which only about 2 lakh tons is done through our own vessels.
Right.
So rest of the 224,000 has been done through outsourcing of other vessels, which as I have mentioned in my opening remarks, we want to curtail this quantity also and bring through our own vessels, whereby we can save about 50 crores on the bottom line, which is being paid to third party as on date, and we are hiring any vessels from outside.
Sorry, just to clarify, this 50 crore is EBITDA on 224,000 metric ton that you are saving.
About 225,000 tons.
Okay. And by when are we going to completely switch to own vessel? Any timeline you can give out?
See it all, we are planning, as I mentioned in the opening remarks, we are planning to add at least 20,000 more to bring to the current level that we are. And any additional volumes that may go further, we may require some vessels from outside, but largely we will be able to consume our own vessels to bring in the quantities on a large basis, about 80%, 90%, or we will try to make it even 100%, but the volumes and the growth that we are targeting, you never know, you may fall short of any number of vessels that you have then, with the requirement of the industry.
Right. So in the chartering business, what sort of EBITDA per metric ton do we do?
In the chartering business, as we can see on the sector-wise segment result, it is anyway about 20%.
20% margin.
Minimum, yeah. I think you'll be able to see in the segment results.
I'll do the math. No problem. Going forward, what is our sense on debt repayment, or since we're going to be adding more capacity, more vessels, what is your likely debt on the books that's going to be?
See, as on date, we hardly have any debt on. If you compare to the total gross block, we hardly have any debt. But yes, going forward, we do have internal approvals in the company, and we have a capex plan of about 150 crores in the coming year to add 20,000 metric tons of capacity.
All right. That's it from my side. I'll get back in the queue if I have any. Thank you so much.
Thank you so much.
Thank you. The next question is from the line of Abhishek Sharda from Hem Securities PMS. Please go ahead.
One thing can you share the volumes for Q4 FY23?
Yeah. Q4 2022-23, we have done about 152,000 tons.
1,52,000. And sir, it is more than Q3 FY23, right? Q3 is around 110, right?
104, yeah, 115
Yeah.
to be precise.
But sir, if we look at EBIT margins of these quarters, only for the bitumen business, it has fell by around 80 bips quarter on quarter.
See, as I've explained in my opening remarks, we have to look on a year-on-year basis for our company because there are some factors which do affect some quarters.
Okay. But sir, with increase in volume, we have already told that with increase in volume, our EBIT margin will also increase.
Yeah, but if you have to look, if you see the year-on-year margin, definitely you will be able to see that. If you have to give you an example, last year, the year-on-year PAT was 2.73, which is
right,
and which is 2.78 in the current year. I'm talking about standalone. On a console basis, it was 3.98, and this year it is 4.56.
Okay. Okay. And so the whole year volume is 424, and what is the guidance for FY24?
As informed on all the Concalls, we are targeting a additional volume of 10 to 20% on a year-on-year basis.
10 to 20%.
10 to 20%. It has to be a range because if you give me any number, then it may be wrong sometimes. So, minimum 10 to 20% is what we usually target, and we have been able to achieve this in the last few years.
Right. Understood, sir. And these 10 to 20% will also include those two added ship vessels.
Yeah, added ship vessels would be added for bringing the product.
Okay. And sir, one thing I missed in the call, you were telling about something 50 crore increase in EBITDA. Can you repeat that point?
Yeah, I will just explain that again. I'm just giving you an example. This year, about 4,24,000 that we have done. From this, only 2 lakh tons is brought through our own bitumen vessels.
Okay.
And the balance, we had to hire third-party vessels to bring that to India.
Okay.
And if we are able to meet this demand, this additional volume, through our own bitumen vessels, we will be able to save $15 per metric ton in this volume, and on a minimum of 20% ROI that we do that we are able to earn when we do through our own vessels. So $15 into 2 lakh tons plus 20% on the volume of bitumen vessels that we will be earning from the operation of these vessels. So somewhere around 50 crores.
Okay, sir. And sir, in the shipping business, you just now mentioned that minimum of 20% operating margin, right?
Yeah, bitumen shipping, yes.
But if we look at it varies a much. This quarter it comes at 35%. In the last year, same quarter it was around 25%. So,
this margin, as I said, this sector has to be looked at on a year-on basis. Yes, because sometimes crude prices, because of crude price, bunker prices also go up and down.
Okay. So sir, majorly depends on crude prices and freight prices.
Sometimes the vessel is also gone for dry docking, and during that dry docking, the vessel is not available at your disposal to earn. That all those factors are inbuilt in a year-on-year basis.
Okay. Fine. Thank you, sir. I'll join back in the queue.
Thank you so much, sir.
Thank you. Ladies and gentlemen, that would be our last question for today. I would now like to hand the conference over to Ms. Astha Jain for closing comments. Over to you, ma'am.
Thank you, Darwin. On behalf of Heme Securities Limited, I thank Agarwal Industrial Corporation Limited team for giving the time we spent on this call and responding all the queries in the detailed way. I would also like to thank all the participants for joining this call. Now I would like to hand it over to the moderator.
Thank you. On behalf of Heme Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you so much.